Well, that's lots of views, and let's get some more with Danielle DiMartino, Booth CEO and Chief Strategist at QI Research. Danielle, great to have you with us here. Good morning. Appreciate your time here on CNBC TV 18. So is the global panic done for now, Danielle? Simple question.
I think it is. I think that there was, I think the pendulum swung too far and that the sell-off was too deep. And this is what we anticipate and expect. This is how markets behave at these kind of big inflection points. We saw the same type of behavior in 2000. We saw the same type of behavior in 2007, going into 2008. Markets trade in a very jagged fashion as the economy is turning. And I think that that's where we are right now.
Okay, but what about the whole issue that with the yen carry trade and what's been happening with the Japanese market? Do you think even if we see a bit of a pullback and the worst is over, we could be heading into a very volatile phase globally? And if that is the case, then how does one approach markets like India?
Well, I do think, I was trying to say that I was expecting a lot more volatility going forward. We know that more than half of the positions that were short the yen at the beginning of July have been since worked off. So we can say that we're more than 50% of the way through the unwind of this carry trade. But I think that there are so many different things going on in the global economy right now that the base case is going to be for continued extreme volatility. We have to remember that there was a day last week that the NASDAQ QQQ, the NASDAQ 100 was up 5% in one day last week. So again, I expect this volatility to continue as there are so many different sources right now that are feeding uncertainty.
Hi, Danielle. Good morning. I recall the last time we chatted, you said maybe the US markets is towards the last leg of its rally. And you got it right, seems like, because post then the US markets have corrected. But the two markets you were positive on, one was the Mexican market and the Indian market. How do you approach both these two from here on?
Well, right now, the Mexican market is a bit riskier, much riskier because of the potential for contagion from the U.S. hard landing recession and how that's going to be affecting that country. I have high hopes that the new president will implement long-term good strategies. We're still long-term positive for Mexico. We certainly think that the peso sell-off has been overdone just in the last few days. But I think that you'll have a little bit more stability, if you will, in the Indian market going forward, given how closely Mexico's and the United States economies are tied to one another.
So from the emerging market basket, India is still the top pick?
India is certainly, I think, one of the better picks right now. Remember, the MSCI Emerging Markets Index today sold off by 4.2%. So to your point, you have to be very choosy with where you are within the emerging markets complex. I don't think that at this juncture, you can just own the broad risk asset at this point. You have to choose.
So with all the volatility that you're expecting, Danielle, is the up and up, continuous up move. I mean, India and US have been the two best performing markets. I mean, actually throw in Japan there as well. Do you think that phase is kind of broken, or what's your view?
Yeah, I think that we have seen the highs for the market. We've seen more than 100,000 job cuts announced over the past 4 months in the United States. Last week, we had a very large announcement out of Intel Corporation, almost 20,000 jobs. Today, we had one from Dell Technologies, I believe 12,500 positions. So I think that the market is beginning to recognize recession. We saw the yield curve uninvert it was just a hot minute today, but boy, that really got the market's attention. The fact that the 10-year yield was finally where it should be on the yield curve, if you will, the yield curve steepening. So I think we're getting enough signposts to suggest that if the U.S. is going into recession, that we've seen the best we're going to see out of stocks.
All right. Thanks a lot for that, Danielle. Always appreciate your time here on CNBC TV 18.